What's up, traders? Welcome once again. As you all know, this is Greatness FX. In this video, I want to speak about swing trading and how you are supposed to approach the market in a multi-time frame analysis. Without wasting much of your time, let's get straight into the charts and see how to approach the market using multi-time frame analysis. Okay, now we're going to pick any pair we want. There are so many pairs in our watch list. Okay, let's say let's pick one of them. Okay, let's pick AUDCHF, for example. AUDCHF, let's see. Okay, this is AUDCHF. Let's analyze it using multi-time frame analysis and see what we've got. Okay, let me take out this. Now this is AUDCHF. Now the first thing we are going to do is go on the monthly time frame and see what we are seeing from the higher time frame, because they give the big picture of the market. So what we're going to be doing, we'll go on the monthly time frame and see what is happening there. Now this is the monthly time frame. Now let's make it bold and see. Now from the monthly time frame, what can we see? We can see a clear impulse to the downside, and look at this is structure level. The market broke this structure level, this one here. Let me use this to indicate it. Now the market broke this structure level to the downside, after which it's coming for a correction. This is a monthly candle, and we are expecting the market to get to this area before the next push to the downside. But the first thing you are supposed to see in this chart is that this is a downtrend. Now after seeing this downtrend, you should be looking out for area you want the market. You know, a strategy, or let me say, market is a game of probability. This is how it works. You say, if I see this, I will do this. If I don't see this, I won't do this. So after checking the trend that you can see is a downtrend, what are you looking out for now? If the market, you want to get your if, a condition, if it get to this region, this is what I will do. So what we're going to be doing, we are checking if the market will get to this region. We're going to be looking for a sale. So what are you going to do? You'll get your Fibonacci retracement tool and see the confluence that is aligning perfectly with structure. As you can see, the 0.6, let me make this bold. Okay, 0.786 is aligning perfectly with this structure. However, okay, let me not speak about my strategy here. Now, the area aligning with structure is this 0.786. As you can see, that's a strong area, but the market can decide to turn here without getting to this structure level. Why? Because there are some things you need to check out for here before you decide to say, okay, I'll wait for the market to get here or make my entry from here. And that is meant for my students only. I can't share it here, but overall, this is what you should look for in the market. Check first if the market is in a downtrend, and check the area that was broken, because the market works this way. The market works this way. Let me explain the diagram here. For if the market is impulsive to the downside like this, get to this region, it break this region, definitely the market will come back to retest this region before moving to the downside again. So this is how the market works. It works with impulse, correction, impulse. So let's go over to the daily time frame. Now we have checked the monthly time frame. We'll go to the weekly time frame to see what is happening there. So let's just take off this our Fibonacci retracement tool, but we'll still leave this area. Okay, so from the monthly time frame, we saw what a move to the downside, and we expect the market to get to this region before we start looking for a short. As you can see, the market is already retracing to the upside and is moving to this region here, which we saw from the monthly time frame. Now, having seen this, we'll go over to the daily time frame, because the monthly, weekly, and daily are used for directions, and you make your entry from the 4-hour time frame. Depends on your strategy. I am a full-time swing trader, and this is what I do. I do multi-time frame analysis and find my entry on the 4-hour time frame if the rules of my entry will be satisfied. And this is meant for my students only. So the little I can share is what I'm giving out here now, and I believe if you understand this very well, it will go a long way to help you by creating your own strategy. But if you know you can't create your own strategy, there are two ways: either you create yours or you get from someone who already has a working strategy, a proven strategy. Now, if you want to create yours, this will take you years of experience and much losses. But get it from someone, the person has bear all the losses for you, has taken all the losses and all the years to test the strategy. So it's either you buy or you create yours. So let's go over to the daily time frame and see what we can see there, if it's aligning. Okay, well, let me quickly show you something from the weekly. Now, as you can see, this is another structure level here. Let me show you. Like I explained before in my videos, that anytime you see a move to the upside and there's a candle that is not in alignment with that move, that becomes a structure level. Now, all the candles here are bullish candle, but unfortunately here is a bearish candle, here the red candle, so it's not together with the green candles, which is a bullish candle, so that becomes a structure level. The same for this is a red candle, this also becomes a structure level. So let's go on the daily time frame and see if here would be a structure level. Here is supposed to be a structure level as well, because this is a retracement. Now the market moved with impulse. You can see it moved up, retrace, moved up, retrace again, moved up, and it's about to start a new retracement that we either get to this region and start moving to the downside, or will break this region and become an uptrend. But the moment it breaks this region, it becomes an uptrend. That is if the candle will close above it and the next candle will continue to the upside. Okay, going on the daily. Now these are the areas I identified from the weekly, telling you any candle that is not together with the move to the upside becomes a structure level. And you can see clear here, this is a structure level. The market move with impulse correction, and this is another impulse correction, and the market is coming down to form a double bottom, which will turn toward a W formation if it will hold. And after getting this, now what are we getting from the weekly time frame and from the monthly time frame? We are waiting for the market to get here, and if our entry rule satisfied, we will short. But the market can actually get here and our entry rule won't be satisfied, and we won't take the trade. So at the end of the day, you might discover the trade, the market will break this region and continue to the upside. So what has our entry rule done? It didn't give us any opportunity to take this trade because it know the market will break here to the upside. But if the market will get here and provide our entry rule, we are going to short it for at least a 1 to 3 risk to reward. But from the structures developing right now that I'm seeing, the market might as well break this region or will respect it. So let's see from the forward time frame, which is our entry time frame. As you can see, it's moving with a full impulse to the upside. This is a clear uptrend from the forward time frame. This is what most people miss, especially the scalpers or the day traders. Now, one candle from the monthly time frame can be a full trend from the 4-hour or 1-hour time frame, as you can see here. So without wasting much of your time, let's check for another pair. Let's just check out another pair. Okay, AUDCHF. Already on this trade before. Okay, let's just go for another pair. DPB card. Okay, we're still on this trade. Okay, this trade hit us at break even already. Let's just check for another pair. I want us to analyze a pair that I'm not trading currently. Okay, let's see what we've got here. Now this is AUDUSD. Now, doing multi-time frame analysis in a swing trading perspective, we're going to go on the monthly time frame and see what we are getting there, after which we can come down. Okay, so let me delete this. I used it when I was trying to explain something to my students. Okay, now this is the monthly time frame. What can you see first? The first thing you can see now is that the market is in a downtrend. And why is it in a downtrend? It broke structure and retested that structure area. As you can see, this is a structure level. It broke it to the downside, retested it with a hunt stop loss. This candle was used to hunt stop loss, and as you can see, after retesting it, the market started moving to the to the downside, and the market is currently breaking another structure level, which it will come back to retest after breaking it. but right now the market is in a downtrend. Okay, let's go on the weekly time frame and see what we are getting. Now, as you can see from the weekly time frame, the market is clearly in a move that I wouldn't advise anyone to trade, because you can see up the market move with impulse, move with impulse to the upside, impulse to the downside again, and as you can see, this green candle, this bullish candle almost covered this in fact it covered this candle and parts of the of the candle before this one. As you can see, this move, especially this move, is not advisable in the market. But as you can see from the monthly time frame, we already see the market is in downtrend at this region, and some people must have shorted this pair to this region. But however, what are we looking at from the monthly time frame? You can see we are waiting for the market to break this region, and at the retest of it, we'll be looking for what? A short. Now, as you can see, the market has broken below it, and this bullish candle is trying to retest it. So we'll go on the daily time frame, because the market will be clearer there. Most of the analysis are taking on the daily time frame, because 90% of the analysis, because the market is very clear there. As you can see, what do we have here? You can see the move to the upside. This become a head and shoulder formation. This is what you can see, the clear move here. This is what a left shoulder. This is what a head, and what right shoulder. So as you can see, the market is in a clearly downtrend. Now, this is the area we identify from what? From the monthly time frame that the market will get to before moving down. As you can see, it's coming down. Now, this is another area we identify from the monthly time frame. Once the market gets here, it's going to continue to the downside after the break and retest. Now, what do you see? The market would form a double bottom here. It moved to the upside to form a double top, and currently is moving to the downside. But what are we looking for? The market has broken structure, so we expect the market to get to this region before the next impulse to the downside. So you are going to be monitoring this pair, though this is not in my watch list. I'm just trying to show you how to do multi-time frame analysis. Now, okay, now the 4 hour also form its own head and shoulder pattern, but we are going to be monitoring this same pair. As you can see, the pair is an uptrend currently in the 4 hour time frame, but we're going to be monitoring it if the rules of our entry will be satisfied. Now, this is a structure level that will hold this pair if you enter this pair from here. Now, this is the structure level that your take profit will battle with, because definitely if it's coming down, this area must push it to the upside, so your take profit is going to battle with some structures. So we are not only going to be monitoring the price to get here for us to short. Once the price gets here, we are going to be waiting for one of our entry route to be satisfied. In this way, we will take the trade without emotion, and we'll take the trade in a good condition, and for a 1 to 3 risk to reward, a minimum of 1 to 3 risk to reward. In that way, we are having all other factors in our favor, like the monthly, the weekly, the daily. Then we also have other factors like the Fibonacci retracement and some other things to watch out with our strategy. So this is all for now. Don't forget to subscribe to this channel so as to get notified each time I publish a new video. And also, you can check out our website at greatnessfxtrading.com for free content as well. You can learn through our articles, free forex education there. And for everyone you don't understand, you can always send your questions to me. My contact details are in the description below, and my contact details are also in the website. You can always send your questions to me, and your questions will be answered in video format every week. No questions will be ignored. So thank you, and bye for now.